Thanks, Sherry. We'll now start the Q&A portion of the call. We'll start by taking Q&A from our retail investors through the Say platform, very important constituency of our shareholder base, followed by live analyst questions. So our first retail question is, Peter, you've said, I'd just like to underpromise and like to overdeliver. You promised 20,000 deliveries in 2022 and 49,000 in 2023. We got 4,022 and guidance is just 10 to 14 for 23. When will we see underpromising and over-delivering? It has been the complete opposite so far.
Thank you, Maynard. I'd just like to start by saying to everyone, I acknowledge and empathize with the frustration, and I take this very seriously. Under-promising and over-delivering isn't about setting low standards or being complacent. It's about being realistic and proactive, and then going above and beyond to try to exceed expectations. And we as a management team, we take this very, very seriously. Back in 21, hardly anyone could have foreseen the disruption to the logistics and supply chain that we saw in 2022 that affected the whole industry. It wasn't just Lucid. It was a bunch of other car companies, very established names, were affected the same way. I was part of a team that worked night and day in that factory to resolve issues throughout 22, and as a huge team effort, we did that. And now we're facing challenges in the market, macroeconomic effects, and high interest rates, which do impact. We've seen the withdrawal of the federal tax incentive at the end of 2022. And these are factors which are very difficult to predict. When we guide, we do so with absolute honesty and integrity to the very best that we are able to estimate. And I totally empathize with our shareholders who are here with us through the long run. But I nevertheless believe that this is a technology race, that the technology that we've developed is unique, it's hugely differentiating, it will enable us to push the price of cars down because we've got more efficiency, which means we can go further with less battery energy, which means we can go the same distance as anyone else with smaller batteries, and batteries are the high cost item, which gives us an advantage in terms of potential gross margin, and I believe this will come to bear in the future. And we've also got compelling products coming. We've got Sapphire, which is going to be a halo product for the brand and help grow brand awareness. As we know that is a limiting factor right now. And then we've got the big one for production coming next year and on track, the Gravity, which I think is going to be a seminal product. So I temper this with unerring optimism for the future for Lucid.
Thanks, Peter. The second question is, would you consider launching the Gravity with a more price-accessible trims first to attract more buyers considering the current economy conditions?
Yeah, firstly, I would say that from a principal perspective and given where we are in the life cycle maturity of our company, we do think it's important to balance between volume and price and not to optimize one to the detriment of the other. Your question is timely because we have been studying this topic, looking at launch cadence, the time between launches, and the price elasticity curves and where the intersection of those end up optimizing for the company. It's still a little bit early for us to comment on our intended approach, but what I can say is that we've already sourced about 80% of the components on the Gravity. It's going really well, and we've been able to stay within our cost targets, which will ultimately give us maximum flexibility to react to dynamic market conditions over time. We're also taking lessons learned from the Air and looking how we shrink the amount of time between trim launches, hence getting all buildable configurations into all regions out to the public faster. And finally, we know it's important that customers are aware of the full price spectrum for the vehicle. We found that a lot of people simply don't know that we offer, in the case of an Air, a vehicle with a starting price of $87,000, as Peter mentioned a few moments ago, and hence awareness is something that we continue to focus on. So we'll keep you posted as we can share more, perhaps at the Gravity Unveil later this year and in 2024 as we approach start of production.
Thanks, Tawanda. Can we turn it over to phone questions, please?
Sure. Ladies and gentlemen, as a reminder to ask the question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please stand by for our first question. Our first question comes from the line of Chris Pierce with Needham & Company. Your line is open.
Hey, good afternoon. Just a clarification. Did I hear you right that test drives are up 2x in 1Q23 versus the fourth quarter of last year? And if that is the case, I was just curious what was driving that given the Dream Ahead tour launched in the second quarter, I believe.
That is correct. It's been a whole holistic series of activities that we've initiated, which collectively will form the basis for our forthcoming marketing strategy. It's not just been the Dream Ahead tour. That's garnering a lot of test drives, but we've been much more proactive, both at studio level through initiatives that we've undertaken from headquarters here to get more people in the car. People are blown away by the sportiness, the driver engagement, the refinement, the comfort of driving a Lucid Air. People who have never driven EVs before are attracted to this. So it's all about getting people behind the wheel to experience. Very few people will actually buy a car without experiencing a test drive. So I see this as a conduit, a sort of gateway to a future purchase and ownership experience.
Okay, and then just lastly for me, with the cars available on the website right now, cars you have in inventory, is there something you're doing to kind of that coincides with the test drives or the Dream Ahead to kind of work through that inventory, or is it just about whatever specifications or configurations a customer wants, you'll build that, based on whatever they order? I just kind of want to get a sense of, I know you're not preferencing time or price, but how you're kind of thinking about, those two dynamics.
Well, we're reconfiguring the website to make the customer experience more seamless, more straightforward. We're showing the cars that we have currently available that can be spec'd on that website. And of course, we're building to order. We've recently introduced the stealth, the dark side look of the Lucid Air, and that's really attracting a very different audience. There's a very different vibe, a more youthful appearance to that car, and it's a very handsome manifestation of the range. So we're doing all those things. We've got increasing volumes of touring out there. We've got tourings in the studio to experience, and test drives are undergoing. And of course, we're bringing more and more affordable versions of Air Pure, the Air Pure coming out. And later this year, we'll be bringing the rear-wheel drive variant of the Air Pure out. Remember that although many people believe that a Lucid Air is a $200,000 car, it actually starts at $87,400, and we need to really dispel this myth.
Thank you. Please stand by for our next question. Our next question comes from the line of John Murphy with Bank of America. Your line is open.
Good afternoon, guys. Peter, in your comments, it sounded like you were alluding to potentially licensing or selling the powertrain technology, and it sounded like that was actually, pretty far along potentially with some customers. I'm just curious if you can comment on that or give us any other color as to what those comments meant.
No, John, I'm not in a position to disclose anything tangible at this juncture, as I said earlier. But we continue to receive incoming interest, and I think there's a growing awareness that we have something very, very special here in terms of performance and efficiency. And if you can have something more efficient, you carry less batteries, so you're burdened with less battery weight, and this makes the car really more agile and more sporty and more a driver-focused experience. So the technology we have today is eminently suitable for higher performance vehicles with our drive units of 600 to 670 horsepower capability. When we develop lower power units, more affordable units for a mid-sized platform in a few years' time, it's then that technology would be, more appropriate for more mainstream manufacturers. We've not proactively gone out to seek any engagement in this arena, but we've had multiple OEMs come speak to us, and we are in dialogue with several right now. And that's all I really can disclose at this juncture.
Okay, and then Sherry, maybe just two quick financials questions for you. The $411 million of finished goods inventory would indicate there's almost 4,000 units, in stock. Is that, about right, or is there something else in that finished goods inventory that would be considered that wouldn't be a completed vehicle?
Yeah, that is a little bit misleading, so I'm glad you asked the question, John. The finished goods inventory has the inventory that is available for sale, but it also includes our test fleet vehicles, loaner vehicles that we have in order to give optimal customer care experiences, for the end customer, showroom cars as well. These are vehicles that ultimately, after a few thousand miles on them, or perhaps no miles on them in the case of showroom cars or media cars, that we will ultimately sell, but they're not available for sale today. So it's important to differentiate between available for sale today and finished good inventory that is being used for other customer-facing purposes.
Okay, and then just the other financial question. I mean, there's a lot going on right now, so I haven't had a chance to completely go through that S3. But it sure looks like a mixed shelf. I mean, is there the availability for you to raise material amounts of capital under that shelf that's been filed? Or I mean, I'm sorry, once again, I haven't gone through the details there, but it looks at first blush like there's a lot of room for you to raise capital.
Well, again, this is not a new issuance. This was really just a contractual obligation that was associated with the subscription agreement that we did with the PIF back in December of 2022.
Okay, great. Thank you very much, guys.
Okay.
Thank you, John.
Thank you. Please stand by for our next question. Our next question comes from the line of Andrea Shepherd with Cantor Fitzgerald. Your line is open.
Hi, good afternoon, everyone. Congrats on the quarter, and thanks for taking our questions. Peter, I wanted to perhaps follow up from the one of the last questions in terms of the licensing. I realize you're not providing additional color on that. I'm seeing if maybe I can ask the question slightly differently. Given the slight reduction in the production guidance for this year and gross margins where they are, I guess, what is the reluctancy to introduce this as a new revenue stream? You have the proof of concept with the Formula E series. You've continue to talk about the technology and how superior it is relative to competitors. So I'm just trying to understand, why not introduce this sooner rather than later? Thank you.
There's no reluctance on our part. We're very open and engaged. We have to prioritize here. Last year, my laser focus was working crazy hours in the factory. That's what I was doing, crazy hours to resolve logistics and supply chain issues. My laser focus right now is amplifying brand awareness and creating a cohesive strategy with Andrea to market this brand and make many more people aware that we've got the best car on the planet. Our tech roadmap, I believe, is extraordinary. We will be launching progressively more affordable versions of our tech, which would be appropriate for OEs in different parts, strata of the market. So there's nothing tangible to announce right now. We are in dialogue with third parties, and I will make an appropriate announcement should that bear fruit. But there's no reluctance on our part. We're open and receptive, but I really have to focus on our products right now rather than proactively chasing licensing.
Got it. Okay, understood. Thanks, Peter. And maybe as a quick follow-up, was wondering if you can perhaps just give us any color on the deliveries starting to Saudi Arabia, as part of the major agreements. There was a brief comment there from Sherry at the end. Sorry if I missed it. Just wondering maybe you can elaborate a bit further, just in terms of how you see those progressing. Yeah, thanks.
Yeah, so I think you're referring to the Ministry of Finance agreement that we have, in which they have committed up to 50,000, maybe up to a total, with the option for another 50,000, up to a total of 100,000 units over the next 10 years. We are progressing those conversations. We are in active dialogues. We're in the process of building out the specs for the first vehicles that they want to receive later this year. So that is actively ongoing.
Okay, thanks, guys. Congrats again. I'll pass it on. Thank you.
Thank you.
Thank you.
Thank you. Please stand by for our next question. Our next question comes from the line of Stephen Fox with Fox Advisory. The line is open.
Hi, good afternoon. Two questions, if I could. First of all, the change in guidance in terms of going from 10 to 14,000 to 10,000. How much of that would you say is related to just some concerns on the macro or your ability to build brand versus just factory production issues? Any details you can provide on that? And then I had a follow-up.
Yeah, I think it's important as we take a very responsible perspective of this, that we match the cars that we build, the production volumes, with the cars that we deliver, and that's the balancing act. Certainly we believe that the macroeconomics are playing a part in the deliveries right now. We also believe that the interest rates play a part, even for a high-end product. Even in this part of the market, interest rates do provide a headwind. But we've got initiatives within the company to turn the faucets on to up the volumes should those market conditions improve. And, that we're ready to scale up pending that. And also, as we amplify brand awareness. And also, I come back to this misconception, which seems to be out there, that, yes, people believe it's a $200,000 car, and it's actually the entry-level price is $87,400. It's probably conceivable that people think of it as a $200,000 car because it's so amazing. But actually, it's much more attainable, and we need to spread that word as well.
Great, that's helpful. And then just in terms of, you mentioned maybe bringing phase 2 online in stages. Can you just talk to sort of the triggering point for that, and whether, I don't know whether if you focus on certain stages besides the CapEx efficiencies, it helps in any other ways, or in terms of how the vehicle production goes from a cost standpoint and your ability to react to changes in demand. Thank you.
No, I think it's an important question. So we're in the process of adding significant, I think 2.85 million additional square feet in the Arizona Casa Grande facilities. And it's a number of our shops are being either expanded or new buildings. And what we're finding is that as we look at our production plans, that we have the ability to continue to eke out a bit more volume out of some of our existing machinery, tooling, equipment in the existing shops for a bit longer, which would allow us to take certain of the shops, like stamping, perhaps paint, and potentially delay the onboarding of those. Hence, you will delay the depreciation expense that accompanies that particular machinery, tooling, equipment, and facility to a little bit longer. The other thing we're doing is we're really carefully looking at all of the equipment that's going in each of these shops, and to the extent that there is volume equipment that could potentially be delayed, like the addition of additional robots, for instance, we're looking to put those in place and activate those as they're needed versus doing it all at one time. The other thing that's really unique about what we're doing in the general assembly hall is that we're going to have the ability to dial up the jobs per hour between a few different job per hour points. So it's not a unit step increase in the direct labor and bringing on the equipment, but instead we'll have the ability to dial that up gradually. And we're going to work to be really thoughtful about that so we can minimize depreciation expense and also the just efficiency of the workforce as well.
Great. That's all very helpful. Appreciate the answers. Thank you.
Thank you. Please stand by for our next question. Our next question comes from the line of Doug Dutton with Evercore. Your line is open.
Thank you. Hi, Peter, Sherry, and team. Looking at ASPs, they were about $106,000 per vehicle this quarter. So that either implies some heavy discounting, below MSRP or a lot of pure trim. Can you maybe speak a little more to that and how we can think about that going forward?
Yeah, so I think that when you think about the mix as it starts to differ from 2022, you're starting to have more dominance in trims other than Grand Touring and Dream, right? So now you start having more prevalence of Touring. We're starting to get Pures in there. But as you go forward through the balance of this year, there is going to continue to be healthy mix because some of the higher trim levels are going to start going and are going to the Middle East and Europe. And so you're going to start to see the exposure of those products, those higher end products in those regions while you simultaneously start to ramp Pure in the U.S. and then later send that overseas as you're exiting the year and into 2024. So you're going to continue to see this mix of trims. We did have a 7,500 kind of continuation program that lasted the first couple of months of the year, few months of the year, and that also is reflected in the revenue numbers that you do see.
Okay, and it's safe to say that $7,500 continuation program will come off going forward throughout 23.
It did come off, yes.
Yes, okay. And then just one quick modeling question for you, Sherry, on the LCNRV cadence. Is there any sort of guide on how we might see those charges hit in the remainder of this year and the next, just so that we can, lay it out cleanly in the model and understand, how those might affect the bottom line?
Yeah, no, it's a great question. The LCNRV charges have been really kind of between $180 million, $200-ish million, $220 million the last 3 quarters. So we've kind of seen it basically leveling off. We do expect to see an improvement of that over time because part of the charge is associated with the inventory we have on hand. Given my comments that we're looking to reduce the days outstanding of inventory on hand and not bringing fresh inventory in terms of raw material, and also work in process, finished goods, we would expect that to start to taper down. So as you're looking forward this year, we are expecting some reduction in that over time. The other thing that we have had in some impairments there is we had mentioned some obsolescence, we had mentioned some scrap. I had mentioned the fact that we have some different activities ongoing to really address that in a more proactive way. And that's partly us improving our systems. It's partly us not having to hold as much inventory on a precautionary basis because we're not experiencing the same supply chain issues and the same COVID issues that we had in the past. So bringing down that inventory, making sure it's more current inventory will also improve the situation throughout the year.
Understood. Thank you for the detailed answer.
Of course.
Thank you. Please stand by for our next question. Our next question comes from the line of Tobias Beith with Redburn. Your line is open.
Hi, thanks for taking my question. If we exclude the non-cash inventory write-down charge, your COGS per unit only improved by about 8% versus the fourth quarter of 2022, which likely reflects the rotation towards the lower content Pure and Touring variants, but also some of the discounts that you just mentioned. Are you able to provide some data points for analysts and investors on the work that's being done internally to remove the costs from the vehicle?
Yeah, absolutely. I mentioned a few of them in my prepared remarks, but let me provide some additional context. So some of the work that's being done is on bill of material cost down. Now, they have two different flavors. One part is commercial agreements that we have with our suppliers in improving piece price costs. Some of that happens, as you're negotiating additional volume with them on new programs, they become more open to negotiating down piece price on current programs. So that's part of the effect. The other effect is when we are doing engineering changes that have a corresponding cost increase as well. So BOM cost is certainly something that we are expecting to see throughout the year, though you have to remember when you've got inventory on hand and you're bringing new lower cost parts in, you got to go through that inventory first. That's why I guided earlier that you're going to start to see the impact of that more towards the end of the year and also as you get into 2024, because some of these items we know will actually take effect in 2024. Some of the other areas where we've been seeing some really good progress has been in freight, and that'll start to show up more in Q2 and Q3 as we've renegotiated some of our contracts there. And also we're seeing improvements in manufacturing overhead as well. And then as a result of the workforce reduction, there's improvements that you're going to start seeing. More of it's going to be in cost of revenues than in OpEx, and you're going to start seeing that in Q2. So these are different cost down initiatives that will start flowing through the gross margin. Then, of course, we talked about the greenhouse gas credits, the Inflation Reduction Act, some of those things, some of the trims that we have, those will start hitting a little bit later in the year is our expectation.
Okay, cool. Thank you. And I guess my second question is that the Lucid Air began production roughly 1 year after beta prototyping testing began. And clearly COVID impacted some of the start of production timeline. But shouldn't analysts and investors use the same timeline to conclude that the Gravity SUV begins production in roughly 9 to 12 months from now, given your announcement that this nameplate has just begun road testing?
All I can say is that we've got to get the product absolutely right. There is a gestation period between beta and start of production. There's also a nomenclature issue here. We're on target for start of production late 24 for the Gravity.
Okay, cool. Well, perhaps maybe you outline exactly what needs to happen for the between now and the start of production, maybe so that we can track it in real time. I don't know when you expect the vehicle to get homologated, et cetera, et cetera.
Yeah. Well, I mean, homologation comes relatively late because that has to be conducted to process and tooling represented levels of authenticity that represent production. So right now we're road testing the beta vehicles for the core attributes, structural integrity, drivability, suspension tuning. We're starting on some of the brake development, the traction control, the anti-lock braking systems, the core attributes of the vehicle. Then we will move to a phase of interior development. They won't have representative interiors at this stage. Later this year we'll move to betas with representative interiors. We can do all that development. Then the long lead tooling items are being kicked off because some of the parts take over a year to tool. And then we'll go through a pre-production run through next spring, culminating in production late 2024. On track. And I believe it will be a seminal product. Gravity is on track. It's the big one. It's going to be a landmark. 7-seater, 3-row, super practical, super high performance, extraordinary range, extraordinary performance attributes.
Great. This has been super helpful. Thank you. I'll pass the line on.
Thank you. Please stand by for our next question. Our next question comes from the line of Ron Jewsikow with Guggenheim. Your line is open.
Good evening, and thanks for taking my questions. Peter, just wanted to get your thoughts on kind of competitive dynamics in the market right now. From our vantage point, it feels like a pretty challenging market for luxury electric vehicles, but wanted to get your view on if price cuts from one of your large domestic competitors on their luxury line of vehicles is having any impact on demand for Lucid vehicles.
Well, I think what you're referring to is perhaps a different part of the market. I believe that there is a challenge to the entire market right now because of macroeconomics and because of interest rates, which actually do affect this place of the market. We're seeing key competitors from Germany discounting their products very heavily. That's not just the U.S. manufacturer that you may be referencing. The Germans are heavily discounting their vehicles, and I think there are challenges right across the marketplace. I think what we need to do is just amplify awareness, just how compelling our product is. We've got better range, we've got better interior comfort, we've got more legroom, we're faster charging, we're more efficient, we're higher technology. We've got a fundamentally superior driver engagement experience. I was taking some potential customers for a test drive just yesterday, and they were just blown away by the overall driving and riding experience. And we just need to get more people behind the wheel. That's what this is about. We don't have 100-year heritage or history. We don't have an existing customer base. We need to win new advocates, new customers.
That's super helpful. And it's good to hear you're out in the field kind of promoting the product.
Personally, most weekends I'm out meeting customers at events, and the grassroots evangelism is growing. And this doesn't happen overnight. This will take some time. We are planting acorns for a forest to come in the future. Make no mistake.
Makes perfect sense. I guess just you gave the data points around test drives and the number of cities you're going to for the Dream Ahead tour. Is there anything you can provide on kind of the cadence for order trends since that started, or is it too early?
It's too early to do that, and there are so many factors that overlay. It's very dangerous. But what I would say is this, that we've more than doubled the number of test drives in the last quarter, and I believe that very few people would buy a car without test driving. I see that as a key stepping stone, a key conduit, a very relevant metric, and that is a step towards purchasing ownership. And then what we see is the best salespeople we've got are our customers that become advocates, and some of them even evangelize for us. And there's something very genuine about that.
Yeah, these test drives also give us personal touch points in order to enter into dialogue with the customers, better understanding their needs. And then it also, I would say that as we've stood up the Lucid Financial Services business in the U.S. and then growing that overseas, that's another touch point where we can gain intelligence on what the customer needs, the pricing that they're looking for, the interest rates that they're looking for. And all of these are going to be data points that we can use to refine offerings that are going to best meet the customer needs.
And we're streamlining the whole customer experience, making the website much more intelligible, more intuitive, more user-friendly, and streamlining the ordering process online.
That's super helpful. And just last quick question for me, kind of Gravity, any learnings from the Air launch process over the last 12 to 18 months that'll help inform the Gravity launch, call it 12 months from now?
Oh yes, of course. I mean, we want to continuously improve, and there's a continuous improvement and learning process which we take very seriously. The teams here, the engineering team and Gravity works very closely with production team, design for process, design for manufacture, and this is a really collaborative. A team sport, which we take very seriously. I really believe Gravity is going to be a seminal product. I don't think there's going to be anything out there that's even close. It's taken all the technology that we've developed today and more that we're going to throw at this car, because the problem with SUVs is getting range without an unduly large battery, which becomes super heavy, and then you lose payload capacity on the car. So this is a multi-dimensional, hugely technical challenge, and it's only now, I believe, that we're ready to really give it our best shot. Gravity is going to be huge for us. I'm very excited about it.
That's very helpful color. Thanks, Peter, Sherry, and team. I'll hop back in the queue.
Thank you. Ladies and gentlemen, due to the interest of time, I would now like to turn the call back to Maynard for closing remarks.
This concludes Lucid's first quarter 2023 earnings conference call. Thank you all for joining us today, and you may now disconnect.